Everyone, welcome to another brand new episode of the Outlier Podcast. Today we got Alex with us. Hi, Alex. How are you doing?
Doing well. How about you, Anurag?
I'm doing good. Just I would say a Wednesday afternoon, a sunny Wednesday afternoon. Can't complain. So fantastic. Life is not better. It's amazing. Again, Alex, thank you for joining us. I really appreciate this time that you are spending with us. Thank you for that.
My pleasure. It's great to be here. Thank you for the invite.
Absolute pleasure. For everyone, quick introduction for Alex. Who is Alex? Alex is the Chief Strategy and Growth Officer of Orange County's Credit Union, based in SoCal. Very interesting background, right? Very similar. I mean, me and Alex, we have very similar backgrounds. Alex has spent years working with Fortune 500s before he finally made his move to credit unions prior to our Orange Counties. He has spent good amount of years in Schools First, one of the top credit unions, and then moved to Orange County as a chief growth and strategy officer. But before that, he's worked with organizations like IBM, Deloitte, working for Fortune 500s, and one very common thing between us as working in cross-cultural, cross-geographical teams and leading teams, right? So that's something very unique, Alex, and that's something very unique in the credit union ecosystem, and I think that's the reason it makes you so successful. So again, that was a quick introduction, Alex. In case if I've missed something, please feel free to add it.
No, great introduction. Thank you.
That sounds good, right? Now, first question, Alex. Obviously, you came, I would say, not outside, but you came from the world of Fortune 500s to credit unions, very similar. What keeps you going, and what has been your journey so far?
Yeah, I definitely say that I've had a non-traditional journey into the credit union movement. As you mentioned, I spent probably over 15 years in consulting in Fortune 500 places with global companies. And at the time that I was, having a transition, I was also a member of a credit union at Schools First. So I had been a member for many years. So an opportunity had opened up at Schools First, and I was curious about it. And I really hit it off with my former boss. So joined the organization, and I really enjoyed it. I really felt at home, and I spent 7 years there. It was really like a great experience because I had an opportunity to help the organization grow. It was already, in the top five. Now they're in the top three. And I was part of, at the time, the largest credit union merger in history.
Yes.
And during that time, I also won some awards and accolades. I was chosen the Q's Emerging Leader in 2021. So that was just a fantastic, experience for me. And coming to Orange Counties last year, also, just another feather in the cap, right? So
Yes.
in regards to like what really keeps me going, I think it has to do like with the ability to like make an impact. Like this is such a wonderful industry. We have such loyal members and the opportunity to develop leaders as well. So, I've had a pleasure to mentor really dozens of leaders over my career. And I can confidently say that, I really am sold on that credit union difference, right? I don't think that I'll work for a bank in my career. I really believe in the purpose and the mission of credit unions. So, we're not-for-profit cooperatives. We really care about our members. It is truly about, people helping people. And when I worked for large organizations, at times I felt just like a number. So I was one out of 400,000, or I was one out of 200,000. And while I had, really great experiences working there, at times I felt like really I'm not having the impact that I would like to have. And I know that I'm not just a number here. I know that I'm making an impact with our members as well as with our associates. So that's really what keeps me going.
Very strong. The purpose and the mission for all of us moving from the other side of the capitalist economy to credit unions because of the mission and vision, right? I mean, this really needs to percolate through. Absolutely. Uh, Moving on to the next question, Alex, regarding, I mean, about your background, right? Like, looking back, I would say, are there any specific moments or decisions in your career because you had a very long one with the consulting now with credit unions? Would you say that any specific decision has set you apart, or is there a time when you did choose the less obvious path?
Yeah, in in thinking back, and I've been working for over 20 years now. I probably have to say that coming over to the credit union movement really was a key point in my career. So, I had an opportunity to go to business school, and because of that, I have access to the Alumni Association directory and, for UCLA Anderson. So there are probably, close to 50,000 graduates. So I looked it up and I did a wildcard search and I put in the word bank, and there are over 1,000 graduates that work for banks.
Yes.
When I do the same search for credit unions, there's probably only 30 of us that work for credit unions. So it's like a 30-to-1 ratio, right? So like that, that is definitely a less obvious path, right? Because I remember 8 years ago, the time I was transitioning, I had a couple of offers, and one was to go back to consulting. So yeah, it really felt like it was a less obvious one, and one that, I was kind of second guessing and thinking, would I be bored? Would I be this? And oh, there's not going to be international travel and some other things. But, really working the credit union space made me not only like a better leader, but someone's really in tune with like all the challenges that people face with financial insecurity. So, it's something that's working for a member-owned organization. We don't have to worry about the quarterly numbers. We don't have to, figure out what is the focus because our stock price is down 10% or whatever. So, so we're really able to focus on what matters most for our members and for our team. And I've really enjoyed the journey so far. So I would say that's probably one of the less obvious paths for sure.
Obviously, I mean, going back to the consulting would mean again looking at the numbers every single quarter, right? So I appreciate the honesty, right? And wish I could work for a credit union, honestly, right? Might be I'll consider going forward.
Yeah.
Yeah, that's an interesting value prop. Absolutely. Moving on to the next section, right? This podcast is uh, for outliers. The way how I define outliers is again people who have not followed the usual path. Because if you would have followed the usual path, you would have become a partner in a Deloitte or something. Because it's that's a path that both of us are on, right? Both of us were on, at least. So that's the reason I consider you as an outlier. You just moved out of the consulting world, came to credit unions with believing that mission. So now outliers often evolve, right? Now, my question is, how has your leadership style, or I would say strategic thinking, right, shifted over the years? And is there anything that sparked that growth?
Yeah, that's a good question. I'm just thinking back to like my time in business school, and I had the pleasure of studying under Richard Rummel, who was a well-known strategist. He's retired now, strategy professor at UCLA. So at the time, he hadn't published his book, which is called Good Strategy, Bad Strategy, but that's a best-selling book and widely used in the past 10, 15 years. And that really influenced me and my strategic thinking and what strategy entails, because I feel like there's a misconception about strategy at times, and many people think that a strategic plan is a strategy, and that's not truly the case. Like truly, strategy needs to evolve, and strategy needs to be agile. And really, the most important aspect regarding strategy is the trade-off choices. Like we don't live in a perfect world with unlimited resources and capacity. We
Yeah.
have to really make the hard decisions and say this is more important than that. So really any line of work, I think we need to consider and reconsider alternatives all the time. So I think companies that are great are great at doing that. Like a perfect example is like Netflix. I'm old enough to like remember when I would receive the DVDs from Netflix in the mail, and lo and behold, they shifted to the streaming strategy. They had their own studio, and they're a streaming giant these days, so much that their business model has been copied by Disney, by others, right? So, and that's like an example outside of our industry, but I think that ties into another point. When I think about strategy, I really think about all my experiences from different industries, from different geographies, and I try to bring that into my current role and how the strategic process works, right? So, being born and raised in Brazil, I have family in 3 different continents. I've traveled over 50 countries. All of those experiences really kind of melt into a lot of different viewpoints that I can formulate a recommendation based on all these different components. So, For example, prior to banking, I worked in professional services, and many times I feel like I can leverage some of that knowledge into what I currently do. Like I did so many M&A activities. I think I did 8 mergers during my time with the Fortune 500 place. Traveled all over the world for that. And when we led that, merger at Schools First, that was like so rewarding because I could leverage that experience into exactly what was valuable for my organization and literally save hundreds of thousands of consulting fees because they didn't hire an external consultant. They had me in-house, right? So like, that's one of the advantages. So, and also like from a strategy perspective, when I think about innovation, for instance, many times like I'm trying to think outside the US. Like I just mentioned to you, we're doing Zelle right now, and Zelle is owned by the biggest banks in the US. So because of the network effect, Zelle is very popular with consumers. But for credit unions, it's very costly, and unfortunately, all the money is flowing into the banks because it's owned by the banks. So I keep thinking, just philosophically, why doesn't the U.S. have a solution like India, like UPI, or a solution like Brazil, like PICS, right? These are government-run type of solutions that it's for the greater good, right? It's for the benefit of millions and millions of consumers. And it's a shame that, unfortunately, we're not at the level in the U.S., but many instances I try to think of, is this something that we could hold off or create or try to figure out what is something for the greater good versus, unfortunately, taking a solution that benefits some of the biggest organizations, the for-profit organizations in our industry.
Yes, that's the reason your experience outside of the credit union becomes so handy and helpful. Because, for the lack of better words, you've seen the world, right? You've seen the world, you've traveled the world, you worked with large, huge organizations, and then you're trying to take best practices from them and getting them into credit union. So that's very valuable, right? And someone who heads strategy for a credit union, I think Orange County can't have a better person than you leading the strategy, right? So this is fantastic, amazing.
Yeah, thank you.
Now, since you are responsible for strategy, right? Now, I also lead bunch of strategies. I think both of us think about long-term and short-term strategies, right? So as a CSO, my question is like, how do you define and prioritize long-term versus short-term strategic goals? Because it's a very unique ecosystem, right? In a member-owned organization. So how do you do that?
Yeah, so as I joined here, I've been here for less than a year. I'm a first-time C-level executive, and I had a chance to do a webinar for emerging leaders a few months ago, and I got a question that was very similar in terms of how do you balance all of that? And I think it's such a different aspect of the role because I think the answer to me is just figuring out the right balance. So defining, prioritizing long-term and short-term, it is very difficult. Sometimes we're dealing with very short-term, our deposits are down. What do? We can use a pricing as a lever, right? We can say, let's do a promo CD. Let's try to recoup some of that. Short-term, that works. Long-term, we don't have the cost structure of the fintechs, right? So they don't have physical branches. And we can engage in price wars with people that are backed by venture capitalists because they can afford to lose billions and we can't because, we are having to operate within the bounds of the credit union and NCUA rules and everything else. So it's interesting because short term, we can pull some levers. Long term, we really need to think about building loyalty and building an experience that that we will wow members. That is our goal. We want to wow members. We want members to come and open their account with us and be wow with us. We have fantastic NPS scores, fantastic. Our NPS is in the 80s, so we are usually very high compared to other credit unions and handily beat banks. So we want our members to be so satisfied that they're like, hey, I'm gonna open my kid's account here. I'm gonna continue to take other offers with you. And ultimately, that's something that will differentiate us because, the demographics, your average credit union member is probably 50 years old. And we want to drive that down. We want to be able to, have the younger generation that sees the benefit of, yes, you have the technology, there's nothing mutually exclusive about being high tech and high touch. So we want to be high touch. We want to welcome the members, but we also want to have the technology to back it up. So we really want to continue to gain members and have them experience the journey that, ideally when they're kids or maybe when they're young adults and they're opening their first credit card, and we give them a good value proposition for them to join our credit union because, we want to do that. And I think one of the last points here on this question is because we're member owned, we listen to our members' feedback a lot. The voice of the member, we listen to our board members, they represent our membership. So it's a tough, tricky proposition to try to figure out how to balance growth. And at the same time, we need to be financially secure so that we're here for another 86 years, right? So that's the challenge because it's a very competitive marketplace out there for FIs for sure.
Absolutely. I mean, it's cutthroat nowadays. I mean, credit unions not compete with each other, but the neobanks, the fintechs, they're after all of us, right? So you cannot play it safe. Absolutely. This takes through one sections of the interview where I'm passionate about because I'm a data scientist, so I'm passionate about data analytics. So I get biased at times and I ask people questions on data. So I want to do the same thing even with you because with your background with Deloitte and IBM, you are a data guy too. You've seen data forever, right? So what role does I would say data analytics play in shaping your growth and innovation strategies? Because it has become table stakes going forward, right? You cannot just develop a strategy without having artifacts of data. So how does that one shapes your strategies? And do you want to maybe share an example? I mean, it's more of a extension of the same question. You want to share an example where data analytics actually completely change the game of your strategies?
Yeah. Data analytics really play a huge role. I mean, and that world is just changing so fast because analytics then turn into insights. And now with AI, that is all being automated, right? So I think like other credit unions, we're trying to keep up with all the advancements. We want to provide the insights. We want to provide automation. And we 100% want to be data driven. So if we have the insights to be data driven, we're better able to serve our members. We're better able to say, hey, we can use predictive analytics and say, this is what you may need. And ideally, this is coming sooner and sooner to us. So we do have a few partnerships with fintechs. We've been able to partner up with the fintech to modernize our digital account opening. So that's one example. It's resulted in 50% more accounts open using the new tool in the first 6 months. So that's a good, definitely a good use case, I would say. We've also done a chatbot for lending, and that really has helped our members with answering questions, serving them 24/7, and really driving more business because they're really freeing up our folks to, do some of the more difficult tasks where some of the basics are all being answered by the chatbot. So that's really helping us quite a bit, despite the challenging high interest environment. We're getting some good results. And then I would say that a final example that I can think of is on the fraud sides. There's so much going on and the fraudsters are getting so much more advanced, but we've been able to leverage some of our dashboards and automation to get about an annual savings in the six figures, being able to prevent fraud and being able to identify fraud with some of the tools that we have. So, our organization is really continuing to invest in analytics. We're transitioning from an on-prem environment to a cloud environment. And, it's something that ideally I would love to see this in the near future where, maybe 10 years ago, like Siri and Alexa was something brand new. And now everyone's using them and asking questions all day. And today, I think very few companies, you're able to use the same natural language queries and say, hey, tell me how many members we have that are under 18. Tell me how many members we have today that opened a checking account, that were new accounts. But I would hope in the near future, if we have everything structured in the right way, that it's self-service and no one needs to know SQL, no one needs to go to our data team and ask for queries because they'll self-serve through natural language. So that's one of the vision, and that's what I'm trying to drive in with our team. And hopefully that comes to fruition sooner rather than later.
That's a dream all of us see, that there'll be no more people writing SQL codes, rather leveraging analysts do better things in life, not uh, putting semicolons and commas on SQL query. That's
Yeah.
definitely, that's even my dream. I mean, because I used to write SQL queries even, 6, 7 years back, right?
Right.
Now I'm so happy that that is finally moving out. I mean, let's see how things pan on. Absolutely. Uh, Now moving on to more behavioral stuff, right? Because your current role is not easy. It's pretty difficult, right? Now, hence principle or habit has a lot of things to play in your current role, right? I mean, for the matter of fact, for anyone's role, right? So my question is there any one principle or habit that has consistently helped you, right? Lead through change and ambiguity, because uh, role of a CSO means ambiguity every single day. You are setting up strategy, testing them, working good, not reiterate, right? So you want to share one habit or principle that might be helpful.
Yeah, so I think that a game changer for me was when I earned my ProSci Change Management certification. So that was about 7 years ago. I was working for the Fortune 500 still the year before, and I saw how they leverage those tools and principles, and really that company was the gold standard and still the gold standard in change management. So that was something that I brought over to schools first, and at the time, initially myself and someone else, 2 people were certified, and then when I left 7 years later, we had 25 people certified. So it was a concept that I was helping to introduce, and they got momentum. And we got folks in marketing, learning development. So not just PMO, IT, several people, were certified, and we were all speaking the same language related to change. So I think that's part of the legacy that I feel really proud about. That I'm trying to build with my current credit union. So now we're up to 4. So like I came in, I was the first one. Now we have 3 more, and we're trying to do that. So I think the principle that I highlight with change is that really everyone needs to change at their own pace, right? So we need to reinforce that at the individual level. So, with the certification, I learned about the ADKAR principle. So the ADKAR is an acronym that stands for awareness, desire, knowledge, ability, and reinforcement. So
Interesting.
it doesn't really matter if everyone is aware that this big change is coming. If you have one person, especially someone that's a sponsor, a high level person, that is resistant to that change, your ADKAR journey is stuck at that person at the D, at the desire. They don't have the desire. They don't want it, right? So, as a change agent, I really need to lead by understanding the big picture and then working with everyone and knowing individually, hey, what do you think about that? Let's have a heart to heart. Let's understand. And then figure out a way to build a resistance plan or somehow convince folks that this is the right journey that we need to take. So if we don't have the buy-in, changes will not succeed. So I think a recent example that I can highlight is that in at Orange Counties, we recently changed our core values, and one of the key things that we did was to poll 60 plus associates, like, hey, what do you think we do well? What do you think that we could improve on?
Yeah.
And we heard from them and built the core values, the updated core values, right, with their input. And because we asked them, we had a lot more buy-in. And, we're in Q1, I think we saw some of these behaviors like really take effect. We highlighted innovation, we highlighted risk taking, we highlighted accountability. So it's something that's been successful to date. And I would say for anyone dealing with change is you really need to understand and leverage some of these principles. It's been a game changer for me for sure.
And that's interesting to hear, right? Absolutely. And Alex, in the interest of time, I mean, I respect that, you have a hard stop, right? So I want to ask one last question. I mean, as a strategist, right? There's often pressure to play safe, but do we like playing safe? Yes, no, because we came from outside, you have to experiment in a bunch of things, right? So has I very controversial question, but still I want to ask you, right? Had there been times where you were just deliberately pushed against conventional wisdom? Because it's good to follow conventional wisdom. Credit unions obviously have a lot, but since you came from outside, since we've seen the Fortune 500s, we always challenge the status quo that this is right, this is not right, right? So and hence changes happen, right? So my question is that have there been any times, right, where you've been desperately pushed against conventional wisdom, and what did you learn out of it?
Yeah, that's a great question. Definitely ties into to what we just talked about in terms of the core values, because you know, let's face it, right? Credit unions in general are very conservative, but in today's environment, we can't afford to be, right? So, you know, I think in today's, especially post COVID, members are so comfortable using apps and
Yeah.
they often have more than 10 apps. I don't know necessarily that the whole concept of primary financial institution is there anymore, right? So there isn't a lot of loyalty, and the whole concept about, let's say 20 years ago, where you knew the person that was running the branch and, relationships were built on handshake and someone could come in and know each other. Unfortunately, that is a little bit less valuable with just the wide array of options out there. So, when we talked about updating our core values, it was really to highlight that, some aspects have changed in terms of what's important. And we really need to take more calculated risks, and we really need to have innovation because we're competing with the fintechs. We're competing with Apple and Goldman Sachs, who, you can click a few
Exactly.
things and get a high yield savings account, right? So, and we have been so successful in the credit union movement, right? 80 some years, 90 years. We need to push the envelope. So I think in terms of calculated risk and things that I've done against conventional wisdom, when I entered that competition in 2021, ended up winning it. Really, my whole concept was about prioritizing innovation, creating a center of excellence, which I did at Schools First, and I'm doing here. So, like, I think that's the piece where, we can't just rest on our laurels and say, hey, we've been successful, let's continue to use the same recipe. The game has changed. The game has changed. So
Okay.
it is time for us to pair up with the right fintechs. We're building a fintech framework as we speak here, and really continue to be relevant, because if we just say, hey, let's use our playbook from, you know 20 years ago, we will unfortunately not survive. So I think that's where I'm trying to push the envelope and really focus on innovation, really for our survival, versus just, oh, that's something, let's try it on the side and see if it works or not. Well, that should be central to the existence of credit unions today.
This was so well-rounded answer, and this was one of the very well-rounded shows, I would say, that we touched almost all sections from inception to your strategy to the creating a difference. Again, Alex, thank you for taking your time out today, to chat with me. I really appreciate it.
Yeah, my pleasure. It was great to spend time with you, Anurag.
Absolutely.